What do a $500 billion artificial intelligence startup and one of the most notorious corporate disasters in history have in common? More than most people are willing to admit. This is the story of OpenAI and Enron and why the lessons from one could come back to haunt the other. Enron, in the late 1990s, was the golden child of Wall Street. It was named the most innovative company in America year after year. Its stock price soared and its executives were treated like visionaries who could do no wrong. Everyone wanted to be part of Enron because it felt like they had cracked the code to endless growth. Fast forward to today, and we have OpenAI, the company behind ChatGPT. Their products are in schools, in offices, and in the pockets of millions of people. They are making about $1 billion every month. That is $12 billion a year. And now there is talk of a valuation hitting $500 billion. One of the highest valuations for a private company in history. But here is the first twist. Enron had a cast of characters that seemed unstoppable. Ken Lay was the political insider who knew all the right people. Jeff Skilling was the ambitious risk taker who could sell any idea with a smile. And Lou Pai was the quiet executive who cashed out hundreds of millions of dollars before the company collapsed. He bought a 77,000-acre ranch and vanished from the spotlight. These were people who knew how to play the game at the highest level. Enron's empire was built on complexity. They pioneered a way of booking future profits as if the money was already in the bank. They created a maze of hidden entities that kept billions in debt off the balance sheet. It was so complex that even their own board members did not fully understand what they were approving. And for a while, that complexity worked in their favor. The stock price kept climbing, and the public saw only success. Now look at OpenAI. It started as a nonprofit promising to create artificial intelligence for the benefit of humanity. Then it formed a for-profit arm with a capped profit structure. Investors can make 100 times their money, and then it stops. It sounds noble, but it is complicated, and complexity always carries risk. When most people cannot fully explain how something works, there is a gap in understanding. And in business, that gap can hide anything, from strategic decisions to structural weaknesses. Then there is the Microsoft factor. Microsoft has invested billions into OpenAI. In return, they receive the majority of profits until they recover their investment, and then they keep nearly half of all future profits. That is enormous influence from one of the most powerful companies on the planet. When a partner of that size has that much at stake, the pressure to deliver only grows. OpenAI's governance has already shown cracks. In 2023, its nonprofit board abruptly fired Sam Altman, the chief executive officer. The company went into chaos overnight. Almost the entire staff threatened to quit. Investors and partners were blindsided. And within days, Altman was reinstated and several board members were gone. It was a rare public glimpse into how fragile the leadership structure really was. Since then, OpenAI has been moving toward a more traditional corporate model, but the high-speed race continues. They are burning billions on computing power and research to stay ahead in the artificial intelligence arms race. Every month, the stakes get higher, and the competition gets more aggressive. Here is the danger that history teaches us. Enron was loved right up until the moment it was not. Public trust can vanish overnight. And when it does, no product or reputation can save you. Enron's leaders believed the market's admiration meant they could do no wrong. They ignored warning signs until it was too late and the entire company collapsed. OpenAI is not Enron. There is no evidence of fraud, but the similarities in hype, in complexity, and in the enormous pressure to keep growing are real. When a company is valued at $500 billion, expectations are nearly impossible to meet. If those expectations are built on assumptions rather than clear reality, the fall can be brutal. The lesson from Enron is that arrogance and overconfidence can creep into any organization when the world treats it like it can walk on water. It happened to the smartest guys in the room at Enron, and it can happen anywhere. That is why we should be asking hard questions now. Is OpenAI truly worth what investors claim? Do we have enough visibility into how it operates? Are its internal checks strong enough to withstand the pressure from investors and partners? Technology may be new, but human nature is not. Hype is easy. Reality is harder. And the moment we stop asking questions is the moment we let history repeat itself. If you found this breakdown eye-opening, hit the like button and subscribe. I truly appreciate you being here, and I have even deeper investigations coming soon.